All right, hey there, everybody. Christopher Inks with Texas West Capital, coming at you live here just a few minutes after 11 a.m. Central Standard Time here on, what's today? Tuesday, the 27th of December, 2022. From a warming up area here, just north of Houston. We were, as you guys know, I think we got pretty cold here coming into the weekend. We had hard freeze. Man, busted a pipe here right after the stream on Friday. The pipe busted right in my office area, flooded everything there. So I'm in a temporary office here, off a bedroom, and so that's why it looks different here. Hopefully I sound all right. You guys hear me all right? Let me know. This is the first time I've ever streamed from this particular area right here. So hopefully you guys are hearing it all right. How are y'all doing? I see Teo's here. What's up, man? Checking in from a warmer than normal Romania, it looks like. Dad has checked in. Aramis, what's up, man? Good to see y'all. Man, oh man, just to remind you guys, this mentor program starts tomorrow. I mean, I don't know what to tell you here. Either you believe in your ability to do something to make something of your life, or you don't, right? If you do, and you're serious about, becoming the best possible trader you can be, I can help you with that. We can get that done over the course of the next 365 days, right? That doesn't mean it's going to take you all that time to do it. What it means is we get this stuff going in the beginning here, and then I continue to work with you through the year. But anyway, so much that you're going to get here, guys. You can get into this here at howtotradetowin.com/holiday sale. That'll bring you to an email thing to get in to get the pricing here, and then you'll be in right here. If you can't afford it, guys, we got lots of testimonials here and whatnot. Just the ones I can find real quick and put on here, but lots of them there. Yeah, right now you get it for over 50% off, guys. Remember, this is a year's worth of it. Also comes with Tier 3 and whatnot, and just so much other stuff. Like I said, just come to the page here. You'll see it all. I can finance you personally if you live outside the U.S. or if you live in the U.S. We got two different options here. If you live in the U.S., I do have a finance partner here, a company that will finance you as well. Really low interest rates, stuff like that. Financing lots of different levels of credit, all that kind of stuff. I'm not going to check all your credit on all that here, which is why you have to have the down payment. This one, not a down payment, guys. But you could potentially get in here for just like really stupid inexpensive. But anyway, yeah, so we've got that available for you guys. Also, real quick, guys, the other thing we have, let me see here. Excuse me. We have, let me see here. I've got these posts here that I put in, what's it called, Discord there. We do have the Tier 3 inexpensive right now. Really inexpensive for what we normally charge. And here's the thing, guys. Those two prices for the biannual and the annual membership, that's going to stay. As long as that auto renew is on your is set on your account, the software will automatically give you that price. So you will never be paying regular price again unless you turn off the auto renew or don't pay or whatever. So, I mean, if, it basically on a year, it comes to $50 a month. We've never done that. And it's almost up. Time's almost up for that. So if you were looking to get in, or if you're in and you're looking to get an even better price, now would be the time to log it in, to lock it in. All right. So anyway, that's what we got going on, guys. Man, I'm really excited about this mentor program, man. We're going to kick that off tomorrow at 1 p.m. Central Standard Time. Those of you that are already in, and those of you who will be joining, we're going to have a distinct channel here in Discord. It's going to be called the LMT Mentor Program, and you'll see access to that if you're in the program, and that's where we will put the information and whatnot. Again, weekly meetings. You'll be able to trade with me a couple of days out of the week. Man, oh man, learn my personal system, learn so much more. It's just crazy what we're doing here. But anyway, exciting times, guys. Really looking forward to it. Really excited. I guess that's what we've kind of been culminating, coming up to after the last 5.5 years, getting to this point. Genghis Khan, what's up there? Kimazabi, checking in on the holiday week. Merry Christmas. Merry Christmas to you as well. What's going on, Bamboo? Good to see you check in. So, yeah, guys, we'd love to have you there. Check on in, man. What do we have here? This is the CME FedWatch tool here. This is basically market participants betting on, more or less on what the... Oh, God. Dang it. Oh. Oh, sorry, guys. Oh, sorry, guys. Those of you that maybe don't know, I've got a cracked rib. Oh, God, that hurts. Oh. Oh. Okay. Sorry, guys. We'll get into this now. That's really freaking painful. So this is contracts based upon what people think the Fed is going to do at the next meeting, and then beyond that, this is the next one. This is the one coming up here, beginning of February, and then you have your March and your May and everything else. Gives you the target Fed rate and what their odds are. So they got a 59%, almost 60% odds. They think that at least right now that we're going to have like a 25 basis point rate hike in February. 40% chance, basically, we're going to have a 50% rate hike in February. So you can go through these. I don't know if you guys have ever done these. You just have to Google CME FedWatch tool. I'll just put this on here. CME FedWatch tool. And that'll get you the link to this here. And, it changes. It varies as like everything else. As things continue to go on, people buy or sell more. And so, March, they're looking at another quarter. Right now, so the way they're looking at it right now is at the beginning of February, they're looking at more likely than not, a 25% rate hike. You can see that 450 to 475. And then 475 to 500, another 25% there in March is what they're banking on at the moment. Really small chance that they stay flat, that they go to zero in March. But again, you'll see this change as we kind of going through this. But a lot of people tried to fight it back in for December. I kept showing you guys this and saying, the market expects this as far as that goes. And they're usually right on here with these. Had a guy, I don't know, tried to make fun of me, I guess. I don't know, thinking, oh, yeah, it's already been baked in, blah, blah, blah. And then he wanted to say, oh, well, he knows what he's talking about because he's got 30-plus years experience trading for big, huge companies. And so what happened was he didn't end up being correct, obviously. The rate hike was expected. And, the DXYs continued to drop, as I said, back then. I've been saying we hit the 50% rather than the 75% as expected. Man, all I can say, guys, is just be humble out there. God, I don't care how long you've been doing this. Just be humble. I'm okay with being wrong. I try not to be, but, I've always got an idea, as far as what I'm going to do if it does the other thing, right? Those of you that are in Discord with us, TWC, you know that. We always have, I don't just say, listen, the price is going to go here. These are the targets. I say, listen, if we're going through here, here's where we need to get through to kind of suggest that's more likely than not. But if it does break down the other way, then here are your targets below. So it's what we do with TWC, guys, is we give you an idea of what we think is going to happen, but we give you the information you need to trade it effectively. There's none of this blind buy here and pray you're right kind of thing. And that's why, why we tend to do really well, right? Because we're always ready for, what may not happen as well. So there's money to be made either way, guys. I hope you, I hope you understand that. You know, even if you're not with us, just when you're trading, if you want to be successful, you've got to pay attention to that, right? Isn't there a very reliable Fed watch tool out of Vegas, calls presidential elections and whatnot? I don't know if that's very reliable, but this is the one we watch as far as that goes. For the rate hikes anyway. So yeah. Deadly123, what's up, man? Good to see you. Who else is here? It's Diego. What's up, man? Says I've been extremely busy lately, but now got COVID. Oh man. So working from home a few days. I'm okay. It's been mild symptoms. Man, I'm so glad to hear that it's mild symptoms. As y'all know, it's been a heck of a year for me, especially this last quarter or two, man. I got COVID for the first time back there in November, and that just about wiped me out. I was like, are you kidding me? It was just heavy. It was heavy. So glad to hear it's mild symptoms for you, man. Yeah, thank you, man. Yeah, I'll feel better soon. I just, crack rib takes 6 to 12 weeks or whatever to really kind of get to healing, and so until then, it just sucks. It hurts anyway. It makes it difficult to sleep. But man, oh man, if you cough or sneeze or something, it kills you. It's tough. Blaze, what's up, man? Good to see you there. So anyway, yeah, I mean, right now, still looking at that 25 basis point rate hike potentially coming up in February. If you guys follow on the Market Breakdown, my free weekly newsletter, we've been discussing that. We've been looking at indicators and whatnot. We've had everything kind of showing deceleration. We've had the CPI continue to come in. Remember, the CPI topped out at 9.1% year over year earlier this year, and it's continued to come down ever since. I mean, it's still rising, right? But it's rising at lesser and lesser levels, so it's decelerating, right? And so this most recent reading was at 7.1% for November. A year earlier, we were at 6.8%. So, I mean, we were at 0.3% greater, in a year since the last November there. But, again, guys, everybody's sitting here arguing like a bunch of fools over, Fed pivots or whatever. Oh, I got to be right about the Fed pivot. Oh, I got to be right. It's ridiculous. Everybody's missing opportunities to trade. We're watching the deceleration, so we've got that. And then this past Friday, the 23rd, we had the PCEPI, which is the preferred inflation gauge that the Fed watches. And that one came in lower year over year and month over month. As a matter of fact, month over month, it was only 0.1% over the previous month. So it's also, again, showing the decline. Now, the PCEPI, I think one of the bigger benefits of it, see, the CPI gives you like twice the weight of the rents, so the rents are, that much stronger in the CPI, which is why it looks different than what you see in the PCEPI. But in the PCEPI, you can actually see the change in purchases. So you can see how consumers are going from maybe higher end products to lower end products, name brands to maybe store brand products and whatnot, which gives you more information about what kind of spending habits, the consumer is making. And, again, those kind of things are why, the Fed happens to watch it. They switched over to it, I believe, around 2012. So, yeah. Andrew, what's up, man? Merry Christmas, buddy. Good to see you. Deadly says, I was a fighter for a long time, boxing, dealt with a few rib injuries. They are brutal. The inflammation is just nonstop and super painful. Yeah, man. Yeah, I made it 50 years almost. I've had some injuries, played a lot of contact sports, but man, never the ribs like that. It sucks. Anybody, if you've never had it, don't get it. It really sucks. Breathing sucks. Sleeping sucks. Or trying to anyway. Coughing, like I said, coughing and sneezing just kind of kill you there. So, yeah, I mean, it is what it is. I'll get over it, So anyway, so that's what we're kind of looking at here, right? The dollar. Now, so the dollar locally, this is the 1 hour chart on the DXY, okay? Now, you can see that it looks like we got a three-wave rally that got rejected at the hourly pivot, right? So what we want to see, instead of breaking out higher, we want to see the DXY drop down below, You know, again, 1, 2, 3, right? So below 2 here at 103.949. If we can do that without breaking out ahead, then it locks this in as just 3 waves up, which would make it corrective. If we break out higher here, then it's 5 waves up, and then it could continually break out higher. But if it's only 3, and we break down through that, then we should continue down lower, right? So wave 3 right now has a minimum expected target of 101.035. But, you know, the count is kind of a little bit sketchy at the moment. Let's get here to the 4 hour. You can see that the 4 hour here, we're about neutral on RSI. Stoke RSI dipped down into oversold and trying to break back out. Let's see here. Yeah, I mean, you know, the 4 hour, it looks kind of ugly. So, you know, if you look at the weekly Bitcoin and you say, oh no, it's definitely got to go down now because it printed something pretty similar to this right here. And then you look at this and go, oh no, it's going to break out higher. Well, are you doing it right? I mean, you know, because of the candle, right? So, you know, this is a potential reversal. It's a pretty strong bearish candle. But like we said on Bitcoin, you know, if you get a rally and a breakout rather than a follow through below the swing low here, then that can be quite bullish. So, you know, this is just the 4 hour here, whereas, you know, the Bitcoin there is on the weekly, right? But here are some similar examples. You know, you have this kind of larger body here, comes down. You have this one right here, which you have a bit of a wick underneath. You probably can't even see this, but I'm going to try anyway. Right here, you got a bit of a wick here. Over here, you don't have any wick, but again, same idea with the candle there. A little bit larger body, same idea, right? And so what these candles are actually telling you guys, when you have a trend, and then you have a large wick at you know, as that trend's progressed in the direction of that trend, and it, you know, and then it closes toward the bottom of that. What that tells you is there's an exhaustion of the trend, and most often that, you know, leads to a reversal, right? But you need to have some confirmation. You need to have some follow through lower there, and so that's going to kind of be what we're looking here. You know, some breakdown lower here. Now it's possible we can get a rally up. Usually I look about halfway up the wick as a potential target area. So that would get us up here at around, maybe around 104.25. So that's usually where I'll look if there's a bit of a wick. As you can see, it's a good area right there. You can see the resistance and support right in that area. So wouldn't be surprised to see that, but what we're looking for is a breakdown below this without breaking out above the swing high here. If we can get that, again, this is 3, this is corrective, and we should be heading lower. Now, what does that mean? Well, that means I think that we would potentially have a target around this S1 pivot. And if we did get a rally off there, we should get rejected around the hourly pivot. So kind of this idea that the price does, you know, this kind of thing, boom, boom, and then head down. And that's what we generally be looking for. If it deviates from that, if we either continue up from here or we get down here and then we continue up here, it puts the count in danger and suggests that we may be breaking out above this swing high here, which just means that wave 2 becomes, you know, it puts wave 2 in jeopardy. But until we get a breakout above wave 2, you know, this count kind of stands as it is here. So if we're going to get this move down here with the DXY, again, that takes all that price pressure, that downward price pressure off risk assets, so stocks and Bitcoin and, you know, other crypto and stuff like that. So, you know, it isn't the only driver of price, guys, okay? It isn't the only driver of price, but it is something that you should be watching, okay? It generally gives you an idea of what's going to go on with the other bit of, you know, especially if you're looking at a little bit larger time frame. So if we zoom out here, we can see that we're just consolidating right here on the S1 pivot. Now, normally consolidation like this, you know, at the end of a trend is usually marks like a wave 4, and then we have a wave 5 lower to finish off. You know, it becomes a triangle, right? So it would be basically, you know, A, B, C, D, maybe make an E and then down. So if we zoom in here, and say, okay, maybe, right? Because if we're saying this is going to be 1 and this is going to be 2, then this has to be ABC. And then potentially, this could be ABC, ABC, so a WXY, right? But that goes down lower there. See, so there's the part where it kind of throws it out. You can go ABC is W, X, ABC is Y, but then you get a breakout higher here and then a breakdown lower. So, a little bit of, we could use more clarity in what's going on here, which would be a breakdown through 103.949 here. That'll give us a little bit more clarity. Then we'll look for a breakdown below that swing low. So that's what we're kind of watching there at the moment, guys. We're just trying to say, can the DXY break down below? Can you lower? That takes that downward price pressure off of Bitcoin and other stocks, and then we could see them rally. Rallying right now, of course, would be what they call that Santa Claus rally, right? It's like I think it's like the last 5 days of the year, and then 2 or 3 days into the beginning of the next year, something like that. It's about a week. And so, we'll see if we can get that, right? Silvio, what's up, man? The floor is, yeah, that's why I'm in this office here by a bedroom rather than my office. That water, that pipe break, man. I've got to get that all cleaned up and damage repaired and whatnot from all that. Good times, right? So yeah, so there we go. So as we get into here, let's go ahead and jump over here to so here are a lot of charts to look at. Let's jump over here to Bitcoin, right? So Bitcoin just kind of did this stupid sideways thing. I say stupid sideways thing, but that should have left you all, those of you that celebrate Christmas, to not have to look at the charts, right? Because it just went sideways. And so this morning, especially if we look at the 4-hour there, we had a nice little 4-hour candle print, right? We had this, looks like a 3-wave move down to the swing low, rallied back up, but now it's getting kind of pressured down a bit. Now it's still above this swing low here, so if we look at the way I was kind of looking at it, was maybe we've got like a 1 and a 2, and then 1, 2. Well, okay. I guess we could have a little bit lower here. So we get like a 1 and a 2 here, and then a 1, 2, 1, 2, 3, 4, 5. So it'd be 1, 2, 3, 4, 5 here, maybe. Depending on how you want to count this right here, right? You got this one right here. But it could be A, B, C still kind of printing this out, right? For right now, like I said, we're right above the swing low here. I'm not sure how it is across other exchanges. I know on Coinbase the swing low is 16,728 and 30 cents, and so far we are at 16,729 and 1 cent. So basically 71 cents above that swing low, right? You can see it's the same place where we're catching wicks here previously, right? Same kind of area, and then it became resistance right here. If it does break down through there, I'm interested in this 61.8 and this 70.5 kind of area. The 70.5 is almost the EQ of this purple demand structure here, which is just beyond the S1 pivot. So this kind of area right here is interesting to me. You can see that we haven't quite dropped down below oversold yet, right? Into oversold with the RSIs, so could continue to push lower. We've got, in this area here, we just got big move up, big move down, big move up. So, I mean, I wouldn't be surprised if it was to break down, to see it get into this area here at that kind of 61.8, which is just the EQ. This previous area here, right? So, I mean, that's what we're kind of watching here. What's going on, right? We're not ready to jump into it. If we could break out above, if we can hold this low and break out above this swing high, we should have an initial target at 17,212 and 75 cents. Secondary target up here around the R2 pivot on the hourly at about 17,510 and a half. If we break down again, I'm looking at 61.8 around 16,577 and a half, and then potentially this kind of area right here down to the 70 and a half at 16,323 basically. Obviously, if we break down below wave 2, well, then we're lower. So the other thing I'm kind of looking at here is, okay, so we've got A here. Is it maybe possible that we've got A, B, C here, or WXY is a W, then we've got an X, then we'll have a 3 down for a Y? The idea being with all this consolidation, maybe this is like an A, B, C, D, and then we'll get E, and it won't break out, but it'll break down and maybe target that 78.6 area here. So again, as we continue down, that 78.6 right here around 16,086 becomes that next target on the way down. And we'll look and see if we don't have some kind of WXY or ABC kind of thing going here. But that's only if we're breaking down. As long as we break out above the swing high here, this count still kind of stands as is. And we're looking at maybe like a 1, 2, 1, 2, 1, 2, right? But we would obviously need to see this kind of take off pretty quickly here rather than continue to push down. Does that make sense? So that's what we're doing. There's no reason to enter at this point right now. There's nothing going on here that says, man, I need to be in this, whether short or long. This is why a lot of traders lose money. They're in this. They get impatient in this. We've been going sideways here, since this actually started way back here on Friday, December 16th, right? From over here, this started back on Tuesday the 20th. I mean, so a week at least, right? And people tend to get, amateur, traders tend to get bored, right? Scared they're going to miss out on something, and they just jump in. But if you guys, again, if you're not keeping a journal, you should, because you'll find out that a lot of your losses come from situations like that, where you don't wait for some higher confidence entry. You jump in because you're bored and or you've got that fear of missing out on price action. There's nothing going on here that tells me I want to go long or short right now. I look for that breakout above here. Or if we break down here, then I'm looking for maybe some bullish divergence on, on the hourly or something. Or if we get way down here, the 78.6 maybe on the 4 hour. As we find confluence in one of these target areas to suggest, okay, maybe we need to go long. Till then, this is just sideways, guys. Don't be silly. Don't get in this. Right now, it's right here between the 15-minute and the hourly pivot. Okay? So just, again, guys, be patient. Wait for it to do something that makes it worth your while to get in. Have respect for your money. If you're just jumping in because there's a chance and you're not, and I say this, and a lot of times people, DM me and they're all upset because, they're all butthurt because they feel like I'm talking down to them or something. I'm not. I'm just trying to make you see what you're not seeing. Which most traders, again, are entering in this nonsense here with the idea that it's either going to go way up here or way down here. And they set themselves up to lose money left and right. Usually they're over leveraged. They don't really know what they're doing. And this is the problem. And then they get upset. Oh, Wall Street, crypto whales, whatever, stealing my money. It's all a farce. It's all a game. It's all rigged. Here's the thing, guys. Even if it was rigged, you can still trade it and be exceptionally profitable. You just have to understand what's going on. See, traders spend too much time worrying about is something rigged or not. They spend too much time worrying about is the Fed going to pivot. They spend too much time worrying. It's all this silliness, and you miss all this opportunity to make money along the way. And a lot of your larger accounts online are doing this, guys. And then you get sucked into it because you don't really know what you're doing, and you assume they do because they got a large account. Maybe they've had a couple of decent calls, right? But where does it leave you? Fibaswani, what's up, man? He says, I really do not trade much during the holiday times. Yeah. By the way, Mr. Fibaswani graced us with another guest post in the market breakdown this week. So, again, if you jump on that, you can get that, by the way, guys, if you don't know, at the marketbreakdown.substack.com. And you can get hooked up with that there. And, again, guys, it's just this look at what's going on with the macro and what it potentially means And a lot of times I tend to look at things a bit differently than most of the big, the big, more well-known people out there. But it tends to usually make us money. And so we do that, and then we take a look at some charts. Usually the dollar and Bitcoin, and then maybe some stock charts or some crypto charts or some Forex charts. We take a look at all that and kind of, see what's going on there, what we can see maybe might be happening with all that. So, jump on that, guys. Let me see here. Kimasabi says, I'm looking at the 3-hour order block at 2 p.m. Eastern. Targets to the upside are similar. 17,200, 17,600. Okay. Let me see here. Andrew says, Bitcoin 3-month looks to show 5 waves up for the bigger picture. If this is the case, where could wave 2 end up before wave 3 starts? You said 3-month? Let's see here. 3-month. So, if you're looking at 5 waves down here, then you have to also notice this looks like basically 3 waves up, right? This 1, 2, 3, right? So if this is 3 waves up to a new high, and this is 5 waves down, that would mean this is a flat, right? Because we know this is 3 waves down because we broke out to a new high. You can't get 5 waves down and then break out to a new high in just 3 waves, right? So but we've also looked at this is what we've seen is 3 waves down, right? So 3 waves down and then 3 waves up, and then 1, 2, 3, 4, 5 would suggest a flat, which is what we've discussed, right? A deep flat. Now, if it is, that doesn't mean it has to be done right where it is, right? Generally speaking, though, if it were to be, say, wave 1 down and wave 2 up, your first target for wave 2 is always wave 4 of the lesser degree. So in this case, 1, 2, 3, 4, 5. So if this was 1, your first target would be this wave 4 here at 25, 214.5. Right? And I think that'll probably get you closer to 38.2 than anything else here. Let me see. Yeah, see. It's almost that 38.2 retracement. If we were to check this out and go, okay, well, if this is 1, 2 here, so 1, 2, 3, 4, 5, well, wave 4 rallied almost 38.2. Again, it's right there around that S1 pivot, right? So that makes sense. If this was a wave 4, then normally our target, based on the height of it there, we get you right here around 14,130 or so. That's the 1618 off the height of the wave 4 there. Now, it doesn't mean that wave 5 has to reach that. It's just, again, when you're doing Elliott wave, there are targets that you get that you look for automatically, and then you adjust as price moves. So again, if you're looking for wave 3, you're usually looking for the 1618. Potentially overextensions to 2.0 or 2.618, right? But you're always looking at 1618 first. Wave 4, you're always looking at 38.2 on the retracement, but could go to 50%. Might even stop short at the 23.6, right? But you have a starting point, the 38.2. So the same way we look for wave 5. You measure out wave 4, you look for the 1.618. Beyond that. So you look for wave 5 to be 1.618. I'm sorry, 618 of wave 4 there, right? And once you break down from wave 4 through beyond wave 3. And so that, again, that's where it gets. And so that kind of gets you right around this area right here, this resistance, right? I mean, that's where it kind of gets you there. Put this right up here. I mean, that's like the 14,000 kind of area, right? So just right around there. So if it was to break down further, I mean, again, this is what we know, right? We know we're looking at that target as the next area, right around that 14,000, right? 13.8, 14.1. So yeah, I mean, it makes sense if it was to be 5 down off there. But that, but if you're looking at this, if this is what you're watching, then what you want to see is a breakout above this wave 4 here at 25, 214, 57 cents. Because if you get a breakout above that, and if you think this is 5 down, then that suggests that the decline is over with, and it could go up higher. Now, where else would it go beyond the wave 4? Well, again, if we look at this, right? So I would start looking. I mean, you can look here at the 50% at 31,678, 61.8 right there around 37,555 or so. So I mean, that's kind of where I'd be looking beyond that. I'm not sure I'd expect such a short wave 2. I think it would break out above wave 4 here and rally up into this area. Probably closer to around 39.5, 42.5 maybe. They kind of get you that 65 to 70.5% kind of area. But that gets you up into the meat here, gets you up into the sideways. So I mean, if it is to break out above that swing high there, that's kind of where I'd be looking. That's how I just would look at it, just generally, without even just based right now, without looking at any kind of count coming off a swing low right now. So yeah, I mean, if that's your preferred way to look at it, well, I mean, that's what we're kind of looking at. Interestingly, I mean, if this is the way you're going to look at it, I mean, this is 1, 2, 3, potentially 4 is a flat, right? I don't know. From here, maybe it could be 1, 2, 3, 4, 5. We're guessing this looks like 3 up here. But, even if you zoom in, you can find a count either way, right? You can find a 5 count up and a 3 count up. That's what we've done. So, I mean, if we're looking at that, again, there's possibilities, right? So this is let me switch over to the BLX chart here, because that's got the move, that's got the move all the way back. Oh yeah, here we go, breaking down here. So now we're coming down toward that 61.8. 1 hour is breaking down into oversold. 4 hours. See, I think 4 hours probably going to break down. Let me see here before I jump over that other chart. Let me see what we got going on here. Yeah, so I mean, we could see a bit further here toward this. Oh, what is that? 16,580 to 16,640. Whoops, no. To 16,595 or so. And that would be kind of the target area I'd be looking at here. On the 4 hour, I mean, if we're looking at this, I mean, I could go maybe 1, 2, 3, 4, 5. So A, B, C, and then maybe 1, 2, 3, 4, 5 capitulation at the end, right? So I mean, I could see a flat right here. And if that's the case, if we're rallying up off here, I get you the 6. I mean, almost the levels I'm already looking at, right? 17,230 basically, and then then this other one here would be at 17,375 would be 5, right? So go 1, 2, 3, 4, 5. But this would be expected to be 1, 2 here, right? So that would likely be wave 3. See, that wave 3 gets way up here. So there's a lot of iffiness in that. But if we were to rally up off here, those 2 levels would be what I'd be looking at initially anyway. If we jump over here to the BLX, where is it? All right, well, let's see here. Yeah, the 50 MA on the daily is where it's getting. Yeah, that's what I was going to talk about here. Let me see here. What do we got? All right. So again, that reversal candle we're potentially looking at right here on the weekly. You can notice that that it got rejected here at this ascending support, right? So again, you would need to see follow through up and through that, which would end up being quite bullish because of this particular candle coming at the end of this rally, right? So you've got this upward trend, and you have this particular really strongly bearish candle coming. And if that's all it gets and it breaks out up higher, well, I mean, that's extremely bullish. It means that that supply has absolutely nothing. If supply is fatigued, there's not enough out there to stop it. But usually what we look for this is confirmation on continuation push down, and we look through the swing low. Again, that would get us then looking down there toward that 14,000 area, right? Let me see here. Do I have them on here? You said the 50, right? Let's change this to the 50 real quick. Okay, put it back to the daily. And yeah, there we go, right? So getting rejected here at the 50. Now here's the thing. Here's the and right here, of course, right? Now here's the thing. We've got these trending pretty close. This should be the 200. Yeah. So these are trending pretty close. So if price is to pop out above the 50 here, that's going to pull this 50 up. And what it's likely to do is get us potentially a cross of the 50 over the 200. So a golden cross here on the daily, right? Now that in itself doesn't really say anything. But when that happens, right where price is, that usually indicates that you get the follow through that you're looking for. You know, you see a lot of people on their post, oh, we got a bullish, you know, a golden cross or a death cross, right? And then price doesn't follow the way they think it should, right? They're like, oh, look, it's a golden cross. And then price kind of continues lower, right? Or just bounces a little bit and then continues lower. And if you look, most of the time, that's because it crosses far away from where price is actually happening. So you might get a bullish cross, right? But price is already well above here, and the golden cross is happening down here. So that movement that you're looking for has already happened. Remember, your moving averages are lagging, guys. The same thing with the death cross. They'll be like, oh, look, the 200's crossing down over the 50. But usually, and then price will turn and head up, right? And they'll be like, what the heck? It's supposed to go down lower. Well, that's because price has already dropped down and is well below that cross. So it's already done the work, right? So like you have this right here. Look at how close we are to where we got this death cross here. Right by price, right? Comes on back down, right? Again, right here doesn't do much, but this is all really sideways here. See, here's the problem. This is really kind of sideways here. But if we look where it's not sideways, for instance, you get the it's still kind of sideways there. I guess there's really a good example here. Everything's kind of sideways on the daily, right? But you know, that's why we usually watch on the larger the time frame rather than the shorter time frames. So we usually look like on the weekly or something, because it makes a bit more sense there. But again, if price does break out above the 50 here and wants to rally, it's going to pull this 50, and that 50 will probably cross that 200 right around price, which would, you know, give us more likelihood of it continuing to follow up higher. So yeah, you know, that's potentially what's, you know, what could happen there. We do have this you know, lower lows here, higher lows, bullish divergence, which sent price up to the daily pivot, right? Pull back into support here, rally back up into resistance. So, you know, we need to break out above this resistance and then above this kind of resistance up here, which is just your daily pivot. See how everything, see how there's confluence with everything? You see how the daily pivot isn't just something that appears? You know, all the pivots and all these other indicators that you guys are looking at all are based on the same price action that's happening there, right? So, yeah, you know, we'll see how this plays out here. Let me get back to that Bitcoin chart, the lower one there. Is that the one? Yeah. So we've dipped into this demand structure here, almost hit the EQ. Again, if we can get this breakout, things start looking pretty good, right? They start looking, we get a breakout here at 16,967, then we should take out the swing high here at 17,060 and 86 cents. And if we can do that, that opens up, you know, this move up toward, this descending resistance. Remember, guys, end of the day, the big picture is that right there, right? I mean, look at this. This is the big picture, guys. We are range bound here. We were range bound here from June through November, right? And we've been range bound just below that from November till now. Another week or so will be 2 months, right? With some pushing up into there. So, you know, again, if this does push up and into there, things look pretty good for continuation up. And at that point, you know, what you really, you know, again, you're looking for the breakout above this swing high, this 25,214 and 57 cents. Because if we get that, then remember, that will get us the higher high off the all-time high. Remember, everything from the all-time high is lower highs and lower lows. Bearish market structure. High, low, lower high, lower low, lower high, lower low, lower high, lower low, right? So if we break out above that last lower high, then this bearish market structure is broken. Again, that doesn't guarantee that price then rallies to new all-time highs, but what it means is there is a reprieve in that downward movement. Now, we could rally up and get rejected in, you know, in 40,000 and kind of push back down, and that would create a different bearish market structure, right? It'd be like a high, a low, lower high. If it breaks down below here, it gives us that lower low, right? But until then, it does give us that ability to pop on up there toward that area. So, let me see here. Yeah, so, but I mean, that's where we're at, guys. And there's a lot to be said for this. Again, when you're looking at structure, notice how quick and easy it moves down at the beginning, right? But look what happens here now. All of a sudden, the moves down are a lot less. They're not as violent as what you had here, and they're much more sideways, right? So you get this kind of curving over, right? And that happens because supply starts to fatigue and demand starts to pick up, which starts creating these longer sideways movements, or, you know, descending wedge local kind of movements, or whatever you want to, you know, look at them, right? You're getting less and less volatility, and then the volatility will increase on the breakout and the, you know, and the low point being formed and breaking out of that downward resistance. Then you'll see that volatility kind of increase on that breakout there. And then you'd see it kind of heading up. So, I mean, you know, again, pay attention to what's going on. Don't just assume that because everybody's bearish, things have to continue lower. It may, but if you're trading always based on that, you're more likely not going to be wrong. Remember, everybody was bullish as heck up here, right? And we talked about it having to likely come down to this area, which it did, right? And then here, everybody finally got bearish, and we were talking about it going back up and challenging that all-time high again, right? So, I mean, you know, even within this, you can see that, right? You can see this strong movement up, and then you're getting lesser movement up, and it starts kind of doing this sideways thing, right? Because demand is getting fatigued and supply is starting to kick in. It's the opposite as you see this kind of do here. Now, that doesn't mean it can't continue lower. Doesn't mean it can't all of a sudden get a big influx of supply to come in. But what it does mean is that as traders, you should be watching that. You should be paying attention to what's going on with structure here, right? Let me make a copy here and show you something real quick. Get this back on here since people are watching. That's a pretty good reaction so far. Definitely want to see it continuing to break out above 16,830 and 53 cents there. Kind of zooming out here. So again, what you're kind of seeing going on here is this, right? I mean, this is what you're seeing here. Potentially, like that right there, right? But this gives you a better visual of what's going on. You got the big move down, right? And as you're getting down here, you're starting to go a lot more sideways than down. Again, that's the idea that supply is starting to dwindle and demand starting to show up. And again, we see that here, right? And then you see the attempt to push down lower here, and it barely drops down below. Like I said, I got like 12% drop there, right below the swing low here. But look at the volume on that. They tried to push down. Didn't happen. Dip down here, and now we're up. Pull back to support. Try to rally up through resistance. You know, if we get above there, all of a sudden you should be looking in these areas, right? So again, you know, this doesn't guarantee that you can't get another big push down, but you definitely need to be paying attention when the structure is starting to shift. Oops. And that structure is starting to shift when you're getting less of a straight down and large moves, and you're getting more sideways and smaller moves. And especially if that sideways and smaller moves there are coming, you know, at the end there are coming on much larger volume, so you're going less lower, right? But you're putting in a lot more effort to do it. Greater effort, much less results. That's usually, you know, again, that's what you're looking for when you're looking for some sort of reversal, right? Because you want to see that effort being kicked up at the lows. You want to see it showing up their lows if you're looking to reverse the downtrend here, right? So yeah, I mean, this is kind of, you know, what we're watching here as it does. I mean, this right here, guys. This is what's up. Right? Got the curved bottom, you've got this descending resistance here. So if we get a pop out through that resistance, which will be a pop out above the daily pivot, we should look for an easy rally up to the R1. So you're talking about going from basically 18 to, you know, 20 and a half. Right? What was that, about 16% maybe? 15%, something like that? That's pretty good a rally. But the important part about that is now all of a sudden you've got a base here that you've popped up into resistance. You pull back down to base, right? And you head back up. So, I mean, you kind of look like, if you can get it, you look like something like this, right? And then you look for this breakout higher. Something like that. Because, you know, once you're through this area, I mean, this is just kind of a residual top here, right? But really what you're looking for is this move up toward this then. Right? See where you had all that support? Went sideways? That's what you're looking for. For what it's worth, my daily Bitcoin fib model still shows support, Fiboswani says. Yeah. I mean, I don't think anything's happened yet that that kind of gets rid of that likely support being there, right? But, you know, I know a lot of times, guys, as traders, you know, you go out there and you're looking for indicators, right? You're looking for indicators to do all this work for you. But, you know, what you should be striving for is noting structure, right? Noticing the change that's happening in that price action and volume. That's what we talk about all the time at Texas West Capital, right? It's always about trying to get you to understand structure and expectations. Because, you know, history doesn't repeat, but it often rhymes, right? And so the idea is that human beings act in the same way, right? And so if you can understand that, if you can understand what to expect if things happen, then it puts you way ahead. Instead of chasing price on the breakout here, you're ready for the breakout. You're buying here with the possibility of that breakout, right? Instead of buying the breakout when it gets up here. For most of you, this is where you end up, right? You buy up here rather than here, and you miss a lot of the growth on that, right? And then often, because you're buying here, it'll pull back and it'll knock you out of your position, right? Tell me I'm wrong, guys. Tell me I'm wrong. I know what's going on. You guys forget I was there. I did the same exact things you guys have been doing. This is a funny thing, you know. So I've been talking to traders for, you know, over 25 years, guys, and you know, talking to, you know, teaching people one-off, you know, throughout that time. And then, of course, much larger now over the last, you know, 5.5 years now. But it's always that same thing. Oh, well, if you're telling people how things are going to work or how things work, aren't you worried that it's not going to work anymore? No. This is the same things I talk about today are the same things that have been taught for over 100 years in trading. Nothing changes. People don't change. That's the thing. You have to make those decisions. You have to decide, listen, I believe that I can affect change in my life. I believe I can make my life better. I believe that I can be successful as a trader. You can't be lip service. You have to actually believe that. But if you can, then you set yourself up to understand. You set yourself up to win. Now, that doesn't mean it happens right away or that you learn overnight or anything like that. But at least you're much more likely to benefit from it, right? Gushy Greg, what's up, man? Vibaswani says, fear and greed in humans does repeat. So these structures matter. Yeah, exactly, guys. As human beings, the things we do, again, we talk often about things like, well, maybe not often enough anymore, but about, random walk on Wall Street, the idea that markets are unpredictable, right? Yet we sit here and we forecast constantly. And now, again, does that mean you're going to get it right all the time? No. And, you can always tell who the real traders are online versus who are the pretenders, right? Because the pretenders will go like, oh, you were wrong on this time here, right? And instead of looking at the overall, right? Are you nailing, potentially the bigger spots, right? And they'll look at that and they'll try and call you out on that. And, at times like that, guys, if somebody's doing that, just ignore them. Just ignore them because they are who they are. That's exactly who they are, right? Too many people online are more worried about clout than actually making money. This whole influencer thing is a thing, guys. You need to understand that. And it's tough when you're trading, right? When you're trying to learn to trade, it's tough because you're going to jump on. You're going to immediately flock to the large counts. Ask people how, 2017-18 turned out for them, right? That bear market there. How did it turn out for you if you were listening to those accounts back up here when we were telling you there's a top right there and we're coming down toward this area? What were you doing? Were you listening to the big, did you even have laser eyes as well on your profile pictures, right? You probably did. And I'm not trying to call you out to make you feel bad. I'm trying to get you to understand. Because if you don't understand what's going on, you're going to continue to make the same mistakes. If you choose not to listen, you're choosing to make the same mistakes over and over again. Why would you do that? There is so much opportunity in trading, and all you have to do is be honest with yourself, be humble enough to listen, and then find the right people to follow. I'm telling you guys, as with anything in life, find a mentor or a coach of some sort, somebody who's doing the right things that can help you miss a lot of the bad stuff that you're going to do along the way. You pay a little bit up front, but it saves you so much money in the long run. Everything I do with everybody at TWC and everything we've ever done is always with the thought, when I first came in, what would I, now that I know everything I know with it, what would have helped me when I first came in? Now, that doesn't guarantee I would have listened, and it doesn't guarantee me teaching you guys this is going to make you listen. That's on you. That's where you've got to step up and take responsibility and put forth the action that you need to put forth. Most people choose not to do that. It's easier to blame somebody else. It's not even fun losing money, but people would rather blame other people and not worry about it, right? Because then they're just like everybody else. Everybody else gets to blame everybody. It's never anybody else's fault, right? You want to make money, or do you want to be like everybody else? You want to be average, or do you want to be extraordinary? That's all on you guys. Let me see here. We should talk about that more. I listen to the memes. Just kidding. Yeah, don't let me listen. You know better. But yeah, so I mean, guys, it's. I think for somebody in my position, it's really difficult because I know what I'm saying is falling on deaf ears for most people. Very few people commit. Very few people do the things they need to do. Most people don't believe in themselves. Rather, whether it's in life or business or trading, and they self-sabotage the entire way. And then they sit there and they dream and they go, oh, I wish I could be successful. Oh, you're so lucky. Must be nice. Oh, you did that. Must be nice, right? Admit it, guys. You've probably said that, right? We all tend to fall into that at some point. Question is, do you get out of it? Do you do what you need to do to get to where you want to get? Or do you just sit back and it's always somebody else's fault? You don't try. You kind of half-ass it. You don't do the right things. You don't really strive to learn the right things. You don't do the things you need to do, right? I mean, we do that, guys. That's what we do as human beings. It's a lot of time what we tend to do in life. And again, as I always say, how you view life, the way that you do things in life tends to go over to trading, okay? So that's kind of what we're looking at there. Let me see here. The cubes, man. The cubes, look at that. I think it's quite possible we could have 5 waves up as the leading diagonal here and then 3 waves down, maybe. If so, that gives us a 78.6 retracement. On the daily, we haven't quite dipped down into oversold yet on the RSI, but Stochastic RSI is well oversold there. So we're looking for a breakout above 274.78. If we can get that, I think we got a good target around 310. And that's a minimum. I mean, it could potentially head up higher than that, but that would be my initial target that I would be interested in longing to at that place, right? Tesla, man, Tesla just keeps on sinking, right? So we talked about the possibility we had a target here at the blue structure EQ right around 135, 136, and if it fell through that, we were looking down here at this EQ at around 118. And as you can see, it's still getting down here. So where is that? Well, right now, it's actually hit this structure right here. So if I can draw it in here real quick. Bet you it's hit that EQ right there. Look at that. Right there at that EQ. You can see that we're pretty well oversold on the daily here. Awesome oscillator isn't showing any change yet. Stochastic RSI is flattened out there. Weekly, we're down. You can see that we closed last week in oversold. We're oversold here. What else do we got here? We do the monthly. Monthly is not quite not quite reset yet. But on the monthly here, you can see that the structure here, and after that, what do we got, right? We've got maybe a move down to 57. Shoo. 57 and 58, somewhere right around there, right? I mean, that's quite possible there, right? We fall out of this. As far as the pitchfork goes here, the main levels you're looking at are the blue and the red there, right? And we've fallen through that blue. Now, obviously, we've still got a few more days till the end of the month, right? Anything can happen. We could see, we're pretty well oversold, as you guys have seen on those on the daily and then the weekly, right? So, I mean, it wouldn't be out of the realm of possibilities to see a nice large wick show up over the next few days, right? And see it close above this EQ right here at, again, right around that 135 area. But until it does, it's still open. And once you're dropping down, below this outer tine here, I think that's the 200% right there. This is 100%. This would be 200% here. I mean, at that point, you're pretty much gone once you're closing below that. So again, then we start looking lower there, right? Fibble's got that 39 target. So where you got your 39 is right here. Yeah, it's pretty close. Let me see here. You got 39. Let's see here. Let me kind of move this in a little bit here. Let me see what we can see with 39 here. Well, that's an interesting area right here. Resistance. Sideways. Split candles. As you can see, the trading has been light on the rally up once you got through this area, right? Now you can see that in two ways here. You can see it on the drop off of volume, as we rallied up, right? And, and this is, remember, the volume at the bottom here is time volume, right? So this is the weekly, so each one of these are weeks, right? But also, then you have the volume here at price level. And you can see there's not a whole lot going on at these price levels, right? They don't really kick in until you're getting down at really around $23 or so, right? So, the lack of volume here, the lack of volume here on the rally up makes it easy to fall further. Sure. But we've always got targets, right? So again, the first target was that area, and that was from, way back up here, right? Breakdown through here said that was the first target. Said continue through that, that was the secondary target. Continue through that, we can keep getting new targets, right? Either you can take your profits and enter again, right? Look for another entry, or you can just continue running with that same short, right? But it's important to recognize when reversals potentially happen. Now, we are coming up on this sideways here, right? So it is possible that we see some kind of bounce off here, right? Now remember, none of my targets here say definitely reversal or anything, but potential bounce, right, at least. So right here is around 101. I mean, that makes sense, right? You hit that $100 psychological target, right? It's a zeros number, it's a tens number, right? As human beings, we tend to be psychologically drawn to those numbers. So, I could see this continuing down to the 100 and then getting some sort of bounce. On that bounce, I mean, I'm looking, again, 135 area to start, right? Yeah, 135 area. So, I mean, from $100 bounce, it gets you 35%. I mean, that's a pretty good trade, right? But what you see a lot of traders do is, on the big weekly, it's down, so I'm just going to short. Well, why would you skip out making some money along the way? Because that's not going to happen overnight. It's going to take some weeks to get up there, maybe some months to get up there, right? So what are you going to do? You're just going to sit there in your short while it retraces your short, and then your short kicks back down. Why wouldn't you take your profit on a potential reversal, right? Go long, make some more profit, and then short again and make some more profit. Why wouldn't you do that? But see, it's easier. It's easier. What you're going to notice, guys, is it's easier to talk about the overall direction, right? It's easier to continue being bullish as price is bullish. It's easier to continue being bearish as price continues pushing down. It's much more difficult to understand how and why a reversal may actually be forming. And so that's why you'll see most of your big accounts, they'll be extremely bearish until it flips. And then they'll start backing up over themselves and things they've been saying, right? Especially if it happens a lot sooner than they really anticipated, right? So for Bitcoin, if Bitcoin were to rally up from here above 22.5, above 25, whatever, you would see a lot of these very bearish accounts, these big accounts, all of a sudden start backtracking over things they said. They might even start deleting tweets, right? I don't have to do that because I'm not overly bearish or overly bullish, right? Yes, I have an idea of what I think may be happening, but it's always with the idea that, okay, well, it has to do this to give it stronger likelihood that what it think is happening. But if it does this other thing, then it's not happening, and this is happening instead with these targets, right? So always, unlike a lot of those other traders that you guys can see online, I'm always looking at the structure, right? I'm always looking at opportunity. I'm not stuck in this is what's going to happen forever, blah, 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 or, to somewhere off target, right? I'm like, okay, structurally, this is what we're looking at. Can I make some money right now? Doesn't matter what direction it is, can I make some money? And so when the direction is headed down, right, it's always like, okay, well, is there a reversal coming? Now, if there is, it has to go through this level, and then I'm interested, and then we look at these targets. If it doesn't do that, then we stay short looking at the short targets, right? I mean, it makes your trading so much easier. Now, it's a little bit more hands-on, but that's what trading is, right? Trading is about getting in here, in and out, right? It's not about buying a position, holding on to it for a year. That's investing, right? Does that make sense, guys? Diego, what's up? He says, wow, I don't trade stocks, but that looks bad right now. Yeah, it does look bad, right? But what do we know about corrections? We know that generally the third wave, right, is like is the C wave, right? And that's usually where the capitulation happens. That's where it usually looks worse, right? Looks the worst. Now, that doesn't say this has to be an ABC or a WXY or whatever, but we do know that in corrections, generally your final leg, your third leg down, is going to look the worst. It's going to be the strongest leg. It's going to look like a wave 3, right? And I think that's what usually gets people caught. Now, if we look at this here, let me see here. It looks like, okay, it looks like if I was just to look at this, looks like maybe I got to get looking up here again. Let me see. Looks like 1, 2, 3, 4, 5. So there's a 1, 2, 1, 2, 3, 4, 5. 3, 4, 1, 2, 3, 4, 1, 2, 3, 4, 3, 4, 5. So it looks like 1 or A right here, and then A, B, C. So then B or 2 here, and then let me see here. And then from here it looks like, let me see, where's that? That high there is 313.80. This high right here is 314. Okay, so 1, 2, 1, 2, 3, maybe 4, 5, or maybe 4, 5. So I mean, it could be, well, ABC is 1, 2. See, but then it doesn't overlap, so that doesn't work. So it'd be like a 1, 2, and then a 1, 2, 3, 4, 5, 3, 4, 5. See, if I'm looking at this, that's what I'm looking at. Because if this is going to be ABC 1, 2, well then 4 should be overlapping 1, but it doesn't. So that suggests this is a 1, 2, 1, 2. So if this is 1, 2, 1, 2, then what you're looking at here, 2, and then just do it this way. Right, so then you have your 1, 2, and then you have 1, 2 of 3. And again, it's 1, 2, 3, 4, 5, right? So 3, whoops, 4, and then 5 coming down here would be 3, 4, and potentially puking here at 5, right? So again, from this side over here, you're looking at a leading diagonal. 1, 2, 3, 4. 1, 2, 3, 4, 5 here, right? 5. Which would just then give us a B, C. And this is all potential, guys. Whenever you're putting out counts, it's always based on your best information at that time. So it may or may not turn out to be correct, right? But that's what we're kind of looking at. So let's say we get down to this EQ here, right around $100. And let's say this is maybe a 3 and this is a 4, right? Well, we're looking at 1,000. Look at how perfect that lines up. $1,000 basically for wave 5, based on the height of if this is a wave 4 here. Let me see here. So yeah, so I mean, and it's just possible. I haven't gone over here and counted all this here yet, right? Let me see. I guess we'd probably be looking at this right here, right? Man, look at that. That 38.2 is right around $98.50, $99. So the idea being maybe this is going to be a 1, 2, 3, 4, 5 here, right? Oops, I'm sorry. Get this set up right here. And again, this is all off the cuff. I haven't checked any of this at all. Where do I have this at? One right here. So 1, 2, 3, 4, 5 maybe. 4, 5, yeah. So it'd be something like this. Potentially what could be. kind of forming here, if it was to. But you know, again, just a quick look at what's going on here and where we potentially, because again, if we're losing this, all of a sudden it looks like this down here. Now here's the thing: if we're getting this down here, it's still the 50%. It just means that target for wave 5 would actually go, you know, up here to around 1400, based on the height. Now again, wave 5 doesn't have to reach that. Oh, Jesus, doesn't have to reach that, but you know, the idea is usually that's kind of where it's going, right? Now we can see we got a strong bit of volume off here, off this swing eye here. And so, you know, usually that indicates wave 3, right? You know, within that. So that volume coming in here, you know, again, potentially suggest wave 3 if we're looking at volume. But, you know, it's kind of iffy with where it's at right there, right? Yeah. So we'll see where it plays out here. But again, you know, we've got our ideas, right? We've got our general ideas of where we would expect it to go or what we might expect to happen, right? Let me see here. Fibbo, you DM me your chart. You mind if I share it? Let me know if you mind if I share it, man. We'll take a look at it. Let me see here. Any time to look at the 10-year. Do I have it on here? Do you remember what the... I can't remember what the ticker is at the moment. Come on. We having trouble here? There we go. Do I have a 10-year on here? Oh, here we go. We got the futures here. ZN. Take a look at that. It's basically without indicators, but go ahead. Okay, I'll show you Fibonacci's chart here in just a minute, guys. Let me see here. So we've got the ZN1 chart here. What's my latest one? It's like that one right there, maybe. Are you looking for the other chart? I mean, this looks like we want to rally up higher here. We had that bullish divergence, which it's been playing off of. Yeah. Let me know which exact chart you want to look at there, Andrew Bennett. Let me know the ticker of the one you want to look at. While I pull up Fibonacci's chart here. I don't know, can I see this? Oh, he didn't send us a chart, he just sent us a picture. Oh, I see the way it is. All right. Let's see what we got here. Let me see here. Yeah, longer term targets down there. Yeah. Okay, I see. You got support coming up there. Yep. Yeah, so you've got this Shuvashov fork going on here, I see. We've broken down through that, which should indicate that it's going lower. Yeah. Let me see. What do you got here? So you've got that down to the 100% there. With the 61A being right there at support. Yeah. I mean, definitely possible. Sure. The only thing that gets me about them, that's 112. Where are we at right now? With it. Well, okay, so same chart. Okay, right now. Good. Just want to make sure it's the same, you know, it wasn't like from days ago or whatever. Because I was looking at this, and you see we're pretty overdrawn on the, you know, the daily and the weekly, which suggests, I don't know. I can't tell where this is. Let me see. Where are you coming off here? From the June low? Let's see if I can throw it on mine here. Is that the June low right there? Yeah, so I mean, I guess a 135 check would you know, a rejection there would work, right? Jeez, oh whiz. The best thing I think TradingView's done lately is done this visibility on intervals. Current interval and below. There we go. Makes it so easy to get in there. All right. So yeah, I mean, that makes a lot of sense, man. Look at that. So, if it was just a rally here to 135, remember that's my first target. I mean, that'll take us right to that, right? So, I mean, you know, that would, yeah. I think that would make a lot of great. Now, again, you know, would change this count, right? So I've got this as an ABC, but, you know, what is it here? It's maybe 3. Yeah, see, the 1618 is right there at that swing there, right? Or at that EQ area, right? You would get a 23.6 right around that 131, 135 area. So a short 4. So I mean, it could be a 1, 2, 3, 4, 5 that gets us, you know, A, B, and then C takes you down here. Does that make sense? I mean, so yeah, what Fibbo's got on there, sure. Sure, like you said, it's a longer term chart, but I can see that, you know, playing out in that way, right? So again, the idea would be that we move on down here to this, and then move up here to this, and then, you know, come on back down a little bit to get us 5, right? Let me see here. So that would get us then this target. This will be here about $86 or so, right? $86 or so. Let me see, it'd be 1, 2, 3, 4, 5. Yes, it'd be A. I mean, so if we're looking at that, you know, again, quite possible we could rally back up here toward the 38.2 at 157.5, right? And then head on down there toward that 39 area, right? I mean, that almost gets us to the 1.0 there at 32.5, right? See here. Yeah, and if we continue coming down there, I mean, we'd be looking down here at this weekly demand down here. Whoops. Though, you know, that higher volume doesn't really start until the low there right around 23. So, I mean, could definitely get interesting, right? Sure, sure. Kind of catch up with you guys here. Check out Ethereum. Yeah, let me see here. Ethereum, I've got that chart right here. So yeah, Ethereum getting hit here on the daily at the 50, kind of like Bitcoin, right? Again, moving sideways here since November, right? The big difference between Ethereum and Bitcoin is that Ethereum never made that lower low, right? Ethereum's low is still that June 18th low there. So yeah, you know, I've got this as ABC here. I don't know. I mean, I guess could be potential any down here. Could be a WXY on that right there, right? But nonetheless, it comes up and comes back down. So, yeah, maybe 1, 2, 3, 4, 5. So you get like a WXY or an ABC, and the same thing here. But it even right here, you know, third week of November there, it doesn't quite dip down below. So we got a lower low here on Bitcoin, right? Right here. I'm sorry. Right here. Should be third week in November. Yeah, see, third week in November. Got slightly lower low here with Bitcoin. But we didn't get that with Ethereum. Whoops. Instead, it was a slightly higher low. So, you know, and then so we've come up off that. You know, again, different ways to count this potentially. You know, right now looking at this as a 1, 2, 3, 4, 5 here. So that gives us 1, 2, 3, 4, 5 potentially. And then maybe an A, B, C. coming down there. But, you know, again, we need to overcome the 50 here. Now, like Bitcoin, if we do overcome that 50 on the daily and continue rallying, it'll pull that 50 up, and we could see that 50 cross that 200 right where price is, which would give us more support for potential rallying up off that, right? I do have a 900. Let's see, what's this 900 level? Oh, I do have this 900-ish level. You can see that right now on the chart. Let me kind of pull this over here. We are kind of finding resistance right here at the high volume node, right? It's the 50. It's the high volume node. For right now, it's support on the descending channel EQ. So if we could rally up and break out above here, I mean, you know, we want to look for a target right here at the descending channel resistance. Probably up around 1430, 1460, maybe somewhere up in that area, depending on how long it takes to get up there. But if we can get an impulsive breakout above that, well, then it sets up a showdown with the swing high up here at 2029, 2030. We can take that out. Well, all of a sudden things start looking a bit rosier and possible. But then we still need to get above what would be wave B up here at 3580. What had to break a market share? Oh, Litecoin did. Oh, man, I got to get out of here. But let me see if I can get through these real quick here. Lewis went through third. What's up, man? He says monthly demand area 55 to 30-ish is an area I'm interested in. It's the Y2K time for EV companies, so expecting 80% off the top. Yeah, you know, and so definitely, again, looking at that, we could see that bounce up to 135 or whatever, which keeps it under the Chuvashaw fork that Fiboswani had there. You know, it breaks down and then retests that as resistance and then falls down lower. Gets us that large ABC. Sure. What would that mean? That would probably mean 2024 sometime would be a huge rally coming off that, right? But if we're getting that type of drop, that seems more like a 1-2 at that point, maybe, right? In the meantime, just trade Forex, metals, and indices. Hey, I'm telling you, man, love Forex for sure, man. Let me see here. Yeah, so, I mean, you know, if we're looking at that, I mean, it seems a lot of what Fibbo's talking about there seems to align with what we're looking at as potential local movement, right? Arrow Quinn, what's up? Says, crazy how equities have moved up significantly since October, but Bitcoin has remained in a 5% range. Feels like a true disconnect is happening, just in the wrong direction. You know, again, guys, I'm not a big fan of correlations like that. You know, I've said this many a times over the last couple of years. Everybody says, oh, look, Bitcoin and stocks are correlated, and then it'll stop being correlated, right? And then all of a sudden it'll be correlated. Oh, look, it's correlated. And I don't know. You know, when I trade, guys, what I look for is the thing that happens consistently. And I think if you pay attention to that thing that looks consistent, I think that what it does is it ends up removing a lot of the noise that you're dealing with as traders, right? Because there's a lot of noise, guys. There's a lot of noise in indicators. There's a lot of noise in you know, God, social media. I can't even imagine starting out, you know, when I started out, if there'd been all this social media nonsense. There's so much bad information out there. And some of it isn't even like intentful, you know, intended to be terrible. It's just people that really don't know much more than you. And they think that something sounds good and they do it, but they haven't been through, you know, there's just no real, there's no real substitute for experience, guys, in anything, right? It's the same thing in the markets. You know, you've got to go through it a while to really kind of understand what may be going on there. Because I can sit here and I can tell you all day these things, right, that I've noticed over 25 plus years of doing this, but until you witness it to yourself consistently, you're going to be like, no, you're going to find reasons not to listen, right? You're going to find reasons to try and find fault with what I'm saying, or the first time it doesn't work out exactly that way, you're going to say, oh, look, it was wrong, right? But you're missing the idea, right? You're missing what we're trying to get across. In case you guys haven't figured it out, a lot of being successful as a trader is on you. It really is. It's on you to listen. It's on you to be open. It's on you to do what you have to do to be consistently profitable, right? So, yeah, I'm not a big fan of the whole, correlation with stocks or whatever, because they are two things, right? So crypto is much more risky, right? I mean, they're both risk-on assets, but crypto is much, much riskier than stocks, right? And I think anybody that argues with that really is just kind of, just, they think I'm trying to put down, Bitcoin or something. I mean, I'm not. I'm just mean that the reality of it is much riskier, right? Because there's things like regulation and bad actors that maybe get away with things a little bit easier because there isn't any regulation, But yeah, I mean, you still see bad actors in stocks and stuff like that. So I mean, that's still there as well, right? It's kind of where we're looking at it here right now. I mean, if we can pop up above that 50, if you want an easy thing, if you can pop up impulsively above that 50 on the daily, I think you look at that daily kind of 1350 area, and that 200 should be around there. And if you can get an impulsive breakout above that, you look up here at the R1, I mean, which is right around 1620 or so, maybe a little bit higher, around 1665. But man, once you're doing that, all of a sudden you're taking out this resistance here, right? So, but we need that to happen. If not, again, we drop down lower here and we start looking at, maybe toward 900 here, right? If we're going to break down below that swing low there. If we lose this June low here, well, things start looking a bit, I've got something down there, 460, 475, right? I'm not saying it's going to go there, but I'm saying if we're getting that breakdown, I've got targets, along the way. 590 or so looks like a decent area as well. But, this is what we're looking at here, right? So you got some kind of consolidation going here. And so if it's not a, 1, 2 and getting ready to break out here, potentially becomes a wave 4, maybe some sort of triangle for me, which would probably still see a rally up toward that 1400 area, maybe a little bit higher, right? Be like an A, B, C, D, E breakdown. But man, oh man, that could get ugly fast on that, right? So not a whole lot different off there than what we're looking at Bitcoin, and it shouldn't be. I mean, basically Bitcoin, if Bitcoin's rallying, Ethereum should be expected to do the same as well, right? That's a nice rejection off the hourly pivot the last hour. And you're going to see some follow through up. We didn't quite hit oversold on that though yet. Trader, what's up, man? Trader XO's here. Good to see you, buddy. He says 590 rubs hands. Yes, please. For Ethereum. It would be a good short, wouldn't it? Oh, man. Yeah. So, yeah, a lot of possibility in here. Just keep your minds open to what is possible, Don't have to assume that everything's going to even if the price does go down, guys, here's what I'm trying to say is, even when price does come down, it can take a while to get there. So what I try to do is I try to get profit along the way. I don't just wait for, just the upside when it's going up or just the downside when it's going down. If I can find a good reason to enter contra trend rally, right, I'm going to jump on it. And if that turns into something else, then it's even better, right? But yeah, so a lot of possibility in that, but Ethereum right now has got to break down through this kind of this kind of area right in here, right? This 1100-ish area. Well, I don't know. 1100 really kind of comes down here. I guess kind of like this 1150 to 1200 kind of area here. It's got to get down through that. But if it does, then it does open up those doors to further down. And the big thing to understand, guys, is when you're moving down, let me kind of zoom out here a little bit more. There we go. These big movements are easier to go through. Remember, those big movements, you guys often talk about gaps, but we refer to these big candles as gaps as well, because price doesn't stop along the way to test anything. it leaves you this low volume node here. And so usually price zips right through it. I mean, you had this craziness right here. I don't know if this is on anybody else's chart. This Kraken coming through there. But again, you know, you had this big move down from you know, basically this right here, right? There isn't a whole lot of overlap here. Goes down there until it catches where we were low, rallies back up. So, you know, when you're looking at charts and you've got these big candles, these are inefficiencies. You know, we also consider them the same, you know, the same as what you would refer to as gaps. And so usually price will get sucked down through that. So just be ready for it, okay? Because it can move quickly through it and head down further. Just curious, is there still a plan to implement options coaching into TWC? Yeah, we're going to have options. I've got a course I'm putting together still at the moment, but I'm going to release that. Hopefully in Q1 of next year, maybe Q2, but hopefully I'm trying to get it out in Q1 of next year. Yeah. To be consistently profitable makes sense to consistently take your damn profit. Yeah, exactly. So, you know, again, we can say, okay, things look like they might be doing this or that, but until they actually do them, we do have to kind of just wait, guys, right? We got to see, you know, it's got to do it. But I think it's important, especially if you're looking to do, you know, looking at potential bottoms or tops, right? It's important to understand what invalidates that idea and where your targets are in the movement of the trend. Does that make sense, guys? So, like, if you're looking to say, okay, maybe a bottom's forming here, right? Well, okay, that's great. And on, you've got your targets, you've got your things that you need, you know, you've got your validation levels that you need to see to suggest, okay, maybe it's going up and, you know, targets. But you also have to understand at what point it becomes invalidated based on the way you're looking at the chart. And if it is, not just does it become invalidated, but where are your targets in the grand scheme? Because if you're getting invalidated, it's probably going to continue its trend lower. Where are your targets? And by doing that, guys, you can make profit either way. But too many times people get in there and they get scared and they just, or, you know, I say get scared. As new traders, you just jump all in and say, okay, everything all in at this point because this is what is going to happen. And then it doesn't, and then you lose your money. And then you know, you don't get to be traders, right? Trading's a great lifestyle, guys. It really is. Bamboo, have a great day, bud. So, you know, you've got to do what you've got to do to make sure that you can trade, right? That's what we're talking about. So anyway, I am way over here, 15 minutes, so I'm going to let you guys go. If you're in Discord, I'll be over there, guys, here in a bit. Don't forget, we're running out of time here to join the mentor program and or get that Tier 3 annual or biannual pricing, ridiculous pricing. Once it's gone, you know, you can send me DMs, but I'm going to tell you no because it is so crazy low price. But so make sure you guys jump in there and get it and hang out with us. And you know, we got a lot of great people in there. I think it's better for them than it is for me. Join it for the people in there. So good to have you guys joining in as always. Trader XO, always good to see you jumping in, bud. Who's that? Deadly123, Andrew Bennett, Diego, Bamboo, Glaze. All you guys, man. Great to see you guys in there. Lewis Winthorpe III, thank you, sir, as well. Teo, you have a great day. And, man, we'll see you guys on Friday, okay? Hey, listen. We'll do it Friday, and we'll be closed for a 3-day weekend, New Year's weekend, for Monday, for Saturday, Sunday, Monday. But we'll be back for, again, then Tuesday's thing, okay? Baltazar, always good to see you checking in data as well. You guys have a great day. Trade safe. Man, oh man, remember, the only thing you control in the market is how much you lose. That's it. So keep on working on that risk management. And other than that, man, the best advice I can give you other than that, guys, is to wait for the higher confidence trades. Okay? Don't enter just because there's a chance. Because most of the time, or at least more likely than not, you're going to be wrong. And even with good, you know, even with proper risk management, you still have to make up that money before you can make profit. Stop putting yourself behind the 8 ball, guys, okay? All right. NJ Wave Rider, good to see you as well. Fiboswani, take care, man. All right, guys. Y'all have a great day. And I will see y'all on Friday, 11 a.m. Central Standard Time, all right? Take care.